minutes, we will get started, but we've got so many great people that are in the waiting room. Want to make sure everybody gets entered in. So hang tight, probably another 30 seconds here. All right. Well, good evening, everyone. We are about to begin our program, and I want to let you know that this is being recorded. It will be available for viewing on demand on the TWU Student Money Management Center YouTube channel within 48 hours. So just want to let you know that we are going to click the button and hit record. And welcome to Meet with an Expert, Student Loan Repayment Plans. Tonight's presentation is going to focus on student loans and the information that you need to know to make good decisions about your repayment plans. My name is Shalise Connors, and I am the director of the Student Money Management Center. And let me begin by welcoming all of our students, but particularly those who are graduating in May. Congratulations. We are very excited for you. It's a huge milestone, and we're glad that you have made it through. Pioneer proud of all of you. The Student Money Management Center serves students on all 3 of our campuses. This is an amazing resource. It is free even after graduation, and you're a wonderful alum. If you use your TWU alumni email, you can still take advantage of the Student Money Management Center. We bring you programs such as this one tonight and so much more throughout the school year. We have a few more planned as we finish off the spring semester. And as always, we really welcome you to follow us on social media, specifically on Instagram. We also have Facebook as well, and our handle is at TWU Maroon Money. Online with us this evening, we have Gabby Pringle Owanaka, our Student Money Management Center Assistant Director. We have our experts from the TWU Office of Financial Aid, Elizabeth Mendoza and Brandy Henry. The program is also sponsored by the Spendwell Committee of TWU's Health and Wellbeing Initiative, and we do appreciate the continuing support of their leadership, led by Stephanie Compton and Gabby Pringle Owanaka. Our featured presenter this evening is Sergio Gonzalez with Sallie Mae, and I will introduce him here in just a few moments. We have a couple of housekeeping items to pass along. We will be using the chat feature during this presentation for questions and answers. We will pause as necessary throughout the presentation to answer any questions. Students, if you have a particular question containing personal information that's unique to your situation, we value and want to protect your privacy. So you can message one of our financial aid counselors directly. That would be either Brandy or Elizabeth, because we definitely want to make sure that you get the answers you are looking for. I do also understand that financial aid on their website, and we will be dropping different things in the chat throughout the night. They have an appointment calendar. You can spend 20 to 30 minutes and you can book an appointment directly with a financial aid counselor if that is more convenient for you. We ask that you switch your view to speaker view so you can make sure you can see the speaker as well as the slide deck throughout the presentation. Sometimes it depends on your format, your screen. That could be in the upper right-hand corner. It could be on the top of your screen. And then when you do exit tonight's session, a very short, anonymous, like I said, short 6-question survey is going to pop up. I ask that you really take just a few quick moments and answer the questions on that survey. It really does help us fine-tune our programming for students. Okay, let's get this started. We are very fortunate to have Sergio with us this evening. He's been in higher education since 1995, and he joined Sallie Mae in 2005 and currently supports colleges, universities, high schools, and college readiness programs all around Texas and into New Mexico. He is fluent in Spanish. He is coming to us from Houston, where he lives with his wife and their lovely dog. We're really grateful to have you. And so, Sergio, I turn the program over to you.
Awesome. Thank you so much, Shalise. Appreciate it. Thank you for the invitation. Let me pull up my slides here and we can go ahead and get started. Bear with me here. All right. Can everyone see my screen? Okay, perfect. All right, let me Go back here. As Shalice said, congratulations for those of you who will be graduating in May. What an accomplishment that is. I'm going to leave enough time at the end for any questions, but along the way, we do have financial aid representatives on the line as well that they can answer some of your questions coming in through the chat. And if not, we can answer them at the end as well. So I'm going to go ahead and get started. So you're probably some undergraduate students, maybe you have some graduate students on the line. This all pertains to both students. Even if you're not graduating, I think it's important to know what to expect after you leave college, and that's exactly what we're going to do here, is getting you ready for life after college. And because you borrowed student loans, we want to make sure that you are prepared to go into repayment on these loans as well, right? So let's go ahead and get started. There's a few things that I want to make sure that you understand. There's different type of loans that you may have borrowed and different type of financial aid that are available for you. So we're going to touch on these. So I want to make sure that you understand exactly what it is in your loan portfolio and what type of loans you've borrowed, right? So let's start here, right? There are two main types of student loans that you may have borrowed while you've been at Texas Women's University. It could be in the form of a federal loan and a private loan. And these are not the same things, right? Federal loan is from the federal government. A private loan is through a financial institution. So let's go a little bit more in depth about these two loans. As I mentioned, the federal basically means the federal government is supplying this particular loan. The nice thing about the federal loans is that they're all fixed interest rates, meaning that that rate will stay fixed for the life of the loan. So you're not going to see ups and downs for the life of that loan that you borrowed. It'll be that same rate. And it does require you to file a FAFSA every year if you're needing federal aid and federal loans, right? Whereas the private loans are a little bit different. This is supplied by banks and lenders, right? They usually offer both variable and fixed interest rates, depending on what's more feasible to you. And some of them, especially for undergraduate students, you may not have enough credit established that a co-signer may be required on some of these private loans. But those are the big differences between the federal loans and the private loans. And I wanted to make sure that you had a good idea of what those are, right? I'm mostly going to focus on the federal loan side because it's probably the most of your borrowing that you're doing, but we'll touch a little bit here and there on private loans to make sure that you're successful in paying those back as well. So let's start with the federal loans, right? These that you see on your screen are the most common federal loan options that are available for students in undergraduate and graduate school, right? So for undergraduate students, they're eligible for subsidized loans. A graduate student is not, right? So do you know that? And I'll show you in a minute what loans are available for graduate students, but let's focus for undergraduate first. You have subsidized loans and unsubsidized loans. What is the difference between the two? Well, for subsidized loans, you have to demonstrate financial need in order to qualify for this particular loan. And how does financially determine that? Through your FAFSA. They're going to use that data to see if you qualify for subsidized loan. The great thing about subsidized loans is that you don't have to make any payments while you're enrolled in school at least half time. You don't have to make any payments during periods of deferments or during your 6 months grace period, right? This is the best loan to take out if you're having to take out any loans because it is the best. No interest is accruing on this loan, which is even better. Again, during periods of deferments, during periods of grace periods, and while you're enrolled in school at least half time, right? Whereas the unsubsidized loan, the government does not pay the interest for you while you're enrolled in school. The interest starts accruing as soon as the money is sent to the school. But with the unsubsidized loan, you don't demonstrate financial need. It doesn't matter if you have high incomes or you have no need, you will qualify for the unsubsidized loan. The only reason why you wouldn't be approved for a federal student loan was maybe you have bankruptcy or you've defaulted on other previous federal loans in this program. So do know that, but this is pretty easy to get, and these are again for undergraduate students only. For my graduate students who may be on the line, you are not eligible for subsidized loans. You are eligible for only unsubsidized. And if you have a gap, then maybe looking into a graduate plus loan. But both of these are federal loan programs. And see both of these as an unsubsidized loan where interest is going to be accruing as soon as the money is sent to the school. And if you want to make payments, I always encourage students to do that, but you don't have to. you can defer these loans until after you finish or graduate your program as well, right? But these are the common loans in the federal loan programs that you have for both undergraduate students and graduate students as well. And then some of you may have gone through a private loan, right? Because maybe you found a lower rate on a private loan, or mom and dad found a really good deal on a private loan as well, that maybe they're getting a low rate, and maybe you went that route instead of a plus loan, for example, right? So private loans, these are designed specifically for college financing, right? So TWU has a listing of all the different lenders that have private loans. They're funded by banks and through finance companies. The terms and costs are going to vary by lender, right? So you want to make sure that you look at the prom note and the details and who your servicer is going to be on these private loans. You don't have to make any payments while you're on to school, or you have the option of making payments if you choose so. But all that will be presented to you upfront when you borrow this loan. And there are some different repayment options available, and we'll get into those in just a minute. And let's talk about loan payments, right? When do you go into repayment on these loans? So for your federal loan program, again, I mentioned to you, you don't have to make any payments while you're enrolled in school, at least have time. But if you wanted to make payments, you can. But payments are going to come due for principal and interest on these loans 6 months after you've graduated, right? Or went less than half time in 6 months from that date, right? So every student is entitled to grace period. So this is a period of time where you're kind of getting yourself together and getting ready to go into repayment, hopefully finding a job during that 6 months, having some income coming in so that you can successfully start making payments on your loans. Now, some private loans, as I mentioned to you, require you to make payments. Well, not require you, but give you the option of making payments while you're in school. And if that is the case, then you have to keep making payments while you're in school, during your grace period as well, and then go into full principal and interest on these loans, right? But again, remember your federal loans, you have a 6 months grace period before you go into full principal and interest repayment on your loans. So that's a lot. You're thinking, gosh, I have all these loans that I borrowed. What do I need to do? What is the difference between principal and interest? What is capitalization? What is repayment incentives? Or all these terminologies that come along when borrowing a student loan. So principal is basically the amount that you borrowed plus any unpaid interest that's been added to the loan, right? And interest is basically what the lender is charging you to use their money, right? So these are some common terminologies that I want to make sure that you understand. And when you go into repayment after your grace period, you're going to pay a combination of principal and interest together. And then some other terminologies that are important, like interest capitalization. So this happens when unpaid interest is added to the principal amount of the loan, right? So do you know that that does happen? And I'm going to show you an example of students who choose to make payments while they're in school versus students who do not, and what the capitalization does to that loan program. Because I think it's important for you to see that and to be able to want to make payments if you can while you're in school to minimize some of that capitalization. And then repayment incentives. You want to make sure that you take advantage of these incentives, and they could be in the form of a interest rate reduction, a credit to a loan balance, or some other benefit that helps you to want to make your payments on time. You want to take advantage of those because those are some saving costs that are available to you on these loan programs as well. You'll find those in both the federal loan side and also the private loan side. And I'll show you in a minute what those incentives can be on your federal loans and your private loans as well. But I talked to you a little bit about capitalization. So I want to make sure that you understand how this works, right? So if you see on your screen, this is an example of a student who borrowed $20,000 at an interest rate of 8%, right? They've been in school for 4 years, and they're doing their grace period of 6 months, and they're going to do a standard repayment term of 10 years, right, to pay this back. So let's look at the left-hand side of that bar graph, right? So $20,000 is the amount that they borrowed. And then the interim interest outstanding is about $6,597. And then interest during repayment is about $12,000. So combined together, the total interest paid during repayment is close to $18,700, right? So versus a student who chose to make interest payments while they're in school, it's at $20,000. The interim is very insignificant, right, at $64. But total interest during, interest during repayment was about $9,000, a little bit over $9,000. But if you see the difference between one and the other, where the student chose to make interest payments and the other who did not, there's a close to about $3,000 in savings. So it does help to make payments while you're in school. I always encourage students that if you're able to make some payments at all, you're not required to, and you have to keep doing it every month, but maybe you got some birthday money that you want to put it towards your loan, that you can do that. Or if you wanted to make some payments here and there, try to do so, because it, as you can see, it really helps to minimize some of that interest that's capitalizing on these loans. So loan payments, you want to make sure that you understand what it is that you owe, right? What type of loans do I have? Do I have federal loans? Do I have private loans? You want to make sure they understand who is a servicer and have their contact information so that you can get a hold of them if ever you have any issues or troubles with your loan programs. I always encourage you to gather all your loan documents together, your disclosures, anything that you receive from financial aid, any promissory notes, offer letters, emails, everything. Keep it kind of in a central location in a file so that when you go into repayment, there are no surprises and you have everything readily available to you. And then find out when your loans are going to go due, right? So for those of you who are graduating in May, you probably have already heard from your servicer earlier on. And if not, then you're going to hear from them pretty soon here, right? Remember that you have 6 months from the date that you graduate before you go into full principal and interest on your loans. So you're probably saying, well, how do I know if I have a federal loan or if I have a private loan? Is there a way to find this out? And yes, there is. So all your federal loans, you're going to find them at studentaid.gov. This is an important site that I want to make sure that you bookmark, because this is where you're going to go and find out all about your loan program and any updates that are happening in the federal loan program, right? Because there are a lot of changes, and we're going to touch on that when we get to the repayment options that you have. So in this site, studentaid.gov, you're going to use the same credentials that you use to file your FAFSA, right? So you use those same credentials and go in there, and you'll be able to see how much you borrowed in federal loans, when you borrowed it, how much you borrowed, at what rates, and who your servicer is and their contact information. So all that will be in this database. So any federal loan that you've ever borrowed, you're going to find that at studentaid.gov, right? So for private loans, those are different, because those are not federal loans. You're not going to find those at studentaid.gov. The best way to find if you have any private student loans is by looking at your credit report. And I think this is a good plug to put in here as well, since you're about to graduate. And for those of you who may be not graduating, this is also important for you as well, because college students tend to be victims of identity theft, and I want to make sure that that doesn't happen to you, right? So every year, you should be going to annualcreditreport.com to check your credit to make sure that there are no mistakes or any discrepancies, and that in fact that you have not been a victim of identity theft, right? But in your credit report, you're going to find if you borrowed any private loans, and it'll have the contact and lender servicer information on there as well. But on an annual basis, we all should be doing this, is going to annual credit report, again, to make sure that everything looks correct, that there are no mistakes, and that we haven't been a victim of identity theft. And you can go to annualcreditreport.com. It's free by law. Every 12 months, you have access to this, and you should definitely, and I encourage you to do this to make sure that everything looks good there as well.
Hey, Sergio, quick question.
Yes, please.
Will your federal student loans show on your credit report?
Yes, they will. Yeah. Especially when you go into repayment and they start showing that you're having a payment history, it's going to be added to your report. It's going to be reported to the credit bureaus. So these will also be on your credit report at some point in time when you go into repayment. Thanks, Gabby.
Thank you.
So we have some resources that are free for you. There's a PDF document that gives you a checklist of what you should be preparing while you go into repayment, right? So I encourage you to take advantage of these. On the back of this is where you see track your loans, where you can track your loans. You can see, is it a federal loan? Is it a private loan? You can type it in there, who the servicer is, your contact information. It's just a nice way to have everything all in one place. And on the other side of this document is a checklist where you can check off everything that you need to be doing to prepare to go into repayment as well. So definitely take advantage of this resource. And I'll have this at the end for you as well. So you can get access to it.
I have a question.
Yes, Jocelyn, please.
I believe that I have federal loans because it's a subsidized and unsubsidized loan. So they're not considered private loans.
That's correct. So if you have a subsidized or an unsubsidized, those are federal loans. Yes,
Okay.
ma'am. Yeah. All right, let's get into repayment. So you've probably been hearing a lot in the news about the Department of Education, things about public service loan forgiveness, and also about income-driven repayment options, right? So I'm going to touch on all of these and give you an update of where we are today, but we'll get into a little bit more detail, right? So let's start with the first one here, which is your standard level term, right? So if you do nothing at all after you've graduated and during your grace period, and you don't choose an option, the federal government will automatically put you in a standard level 10-year term, where you're making a monthly payment a month for 10 years, right? It is the lowest overall cost of all of the repayment options that you see here. So if you're able to manage that, then that will be the way to go, right? Some of you may have borrowed more money, that maybe this is not the best option, and I'll give you an example of how that works. Another option is a graduated repayment plan. And this is also a 10-year term. And with this one, you start with small payments and then gradually start building up to larger payments. Kind of think of it as a balloon effect, right? Where you start small, but then you got to finish paying this off in 10 years. So your payments are going to get larger as you progress. Some students gravitate to this because maybe they want to take care of higher interest rate debt that they have and make lower payments on my student loans. And this is a way of doing that. But again, it's a 10-year term, so you got to finish paying that off in 10 years. For those of you who borrowed more than $20,000, $25,000 in student loans, you have the option of an extended repayment plan. So instead of 10 years, this is a 25-year term, right? Kind of the same concept, same amount monthly, but instead of 10 years, you're doing it for 25 years. This is probably the most popular one for students who borrowed more than $25,000. And why is that? Because let's do the example of the standard term. Let's say that you borrowed about $100,000 and your payment is going to be about $1,200 a month for 10 years, right? That may not be manageable for you to do monthly for 10 years. So maybe you look at the extended, which is 25 years. So that same example of the $1,200 payment a month for 10 years is now cut in half, right? So now you're paying $600 a month for 25 years. So the positive is the payment is more manageable. The negative is that if it takes you 25 years to pay this back, remember interest is accruing on this loan. That $100,000 that you borrowed has now become $200,000 because it's taking you 25 years to pay this back, right? So those are the pros and cons about the extended repayment plan. And you can also do a graduated plan the same way in 25 years, same like the graduate that we talked about. You start with small payments and then gradually start building up to larger payments on there as well. Now, the next options that you see here, and these have been updated based on the new changes that have happened regulatory-wise. These are all the income-driven options available for students. It's the pay-as-you-earn, the income-based repayment option, and the income contingent, right? So all of these are going to be based on your adjusted gross income, your household size, and your debts that you have, right? So they're going to need proof of your incomes to be able to calculate all this information to tell you what your payments are going to be, right? So this goes in hand with public service loan forgiveness, right? And I'm going to get into that in just a minute. But these income-driven options, right, after so many years of making payments, either 20 or 25 years, depending if you're an undergraduate or graduate students, it could be that after 20 or 25 years of you making payments, whatever balance remains may be forgiven, right? So those are the income-driven options that are available for you. What I will tell you now is that these may be going away, but as of today, they're still here and available for you. And I would think that they would grandfather you in if they go away. I think what they're going to try to do is get all these income-driven options to one only option, and maybe eliminate the forgiveness after 20 or 25 years feature of the income-driven option, right? But you do have all these available for you. So take advantage of them if this is something that you're wanting to do. There was a pause on the income-driven options, but they came back up in March. So it is up and running again. So these are definitely available for you today. And then consolidation as well. This has opened up again. And what is consolidation? Consolidation is basically taking all of your federal loans, making one new loan, and they're going to take all the interest rates that you had on all your loans and find a weighted average and lock you in, right? And this extends up to a repayment term of 30 years for consolidation, right? So that's another option that you have as well. Now, public service loan forgiveness, right? This is a program that if you're working for the public service sector, whether maybe you're a teacher, a nurse, a doctor, a lawyer working for the district attorney's office, firefighter, police officers, your public service. So the program says that if you make on-time payments for 10 years, whatever balance remains, the federal government will forgive on your behalf, right? So this program is still available today as well. And the only repayment options available under the public service loan forgiveness is the standard level term and the income-driven options available, right? So do know that. Know that if you are late in making a payment, this usually goes away, right? If you leave out of the standard or the income-driven options and go to maybe an extended term, then this goes away as well, right? So do know that every year that you're employed, you're going to fill out a document and send it to the federal government so that they can see if the employer qualifies as public service loan forgiveness. And every year that you get documentation showing that they do approve and you're making payments on time and enrolled in either the standard term or the income-driven options, then whatever balance remains after 10 years, any balance will be forgiven, right? So this is something too that's being looked at that may be going away. But as of today, it is available for you. And what I would also encourage students to do is to get involved, because these are programs that are there to help you. And if you are a teacher, you are a nurse, and the public service loan forgiveness is important to you, then I would advocate that you contact your representatives in the Congress or the Senate and tell them why this is important to you, right? Because it is available today, but I just don't know if it's going to be here in the future. But as of today, you can still take advantage of it, and definitely do so if this is something that you're interested in doing as well. The other thing that, yeah, go ahead, please.
Okay, I'm so sorry.
No.
I'm a teacher, and what someone told me that I have to wait 5 years to apply for forgiveness, but you're saying it's 10 years, and I have to send a documentation that I prove that I'm making the payment. Is that correct?
Yeah, so there's also what is called teacher loan forgiveness programs available as well, Jocelyn. So maybe that's what you're talking about. And public service, this one is 10 years. So it could be that the teacher loan forgiveness is a shorter term.
Yeah.
Yeah.
Okay. All
I
right.
have a
thank you.
question as well.
Yes.
So, I'm gonna be a nurse, and
Yeah.
so the form you were discussing, like we have to fill that out every year, and they have to approve whether or not the company you work for, is Is it nonprofit or is it public service? That's the public service.
Nonprofit, public service, yeah.
Okay.
Yeah.
So where would that form, is that something that you'd be doing through your work, or is that something you'd be doing through the site where you pay your loans?
Yeah,
Or
so
like
you go
federal?
to studentaid.gov, you'll be able to see that form there, and this is
Oh, okay.
you'll have your employer fill out, and they're going to say that you're employed there full time, and then you're going to submit that to the government, and then they'll tell you if it's been approved, and then every year for 10 years, if it's approved, whatever balance remains will be forgiven.
Okay, thank you.
Yeah, you're welcome.
What is the name of the form again? I'm so sorry.
Yeah, it'll say public service loan forgiveness, and it'll say public service employment verification, and I can pull something up at the end to show you.
Okay, thank you.
As well. Yeah. But studentaid.gov, you can always put in there, put public service loan forgiveness, and all those documents should come up for you as well. Another thing that I wanted to make sure that you're aware of is that studentaid.gov has what is called a loan simulator, which is very helpful, right? Because there it's going to simulate to you what your estimated payments will look like on all the different repayment plan options available. That way it'll help you to be able to budget yourself accordingly to know what can I afford to make payments on a month based on my budget and be better prepared when you go into repayment. So definitely take a look at that as well, because that's a really great resource available for you guys. Private loan repayment. So this is a little different. If you have private loans, remember this is an unsubsidized for the life of the loan, right? There are various repayment terms. There are usually no income-driven options available for private loans. It's usually a 5-year term to a 25 or 30-year term that's available for you, right? So those are available. They have deferments available, which we'll get into in just a minute. But if you have difficulties, just contact your lender and they'll try to find a solution for you as you move along as well. But let's talk about that. Let's talk about, what if I'm having difficulties making payments on these loans? Are there any options to postpone payments? And yes, there is. There's 2 types of ways that you can postpone payments if you're having difficulties making payments. One of those is a federal loan deferment, and the other is a forbearance, right? And I always want to start off with the deferment first, because remember, if you have any subsidized loans, during periods of deferments, the government will pay the interest for you while you are in a deferment, an approved deferment, right? So always start there first. If you don't qualify, then go for a forbearance, where a forbearance, the government does not pay the interest for you on subsidized or unsubsidized, but you're able to postpone payments for a period of time, right? And let me tell you some of the deferments that are available for you. So let's say that you decide to go back to school. Maybe you want to go to grad school. Well, as long as you're able to at least have time, you can do what's called an in-school deferment. Maybe you are having a hard time finding a job, then maybe you can qualify for an unemployment deferment. Or let's say that you do have a job, but your debt to income ratios are really off and you're having a hard time making payments. So maybe you can do what is called an economic hardship deferment. And if you're in the military and get mobilized, you can do a military mobilization deferment as well. For deferments, you have to apply to see if you are approved for a deferment, right? So that's the route that I would go first. If you do not qualify for a deferment, then your next best option would be a forbearance. And with the forbearance, it's not a formal way of applying. You simply contact your servicer and say, hey, listen, I didn't qualify for a deferment. I need to postpone payments. Can you put me in forbearance? And they can do that for you. All right. And you'll find all that information at studentaid.gov as well to give you a little bit more detailed information about that as well.
Hey, Sergio, I have a quick question.
Please.
Do you know any information about Title I schools and repayment options?
Title I schools. No, but I can always check for you. Is that something that you're wanting to know?
Someone in the chat.
Okay. Yeah, I can do a little research for you and see. So Title I or Title IV?
Hello. Yes.
Oh, there.
Oh, hello, Sergio. My name is Ivan. I have a question for you. Yes, about the Title I. I hear that if you work for a school, Title I, or for nonprofit for at least 2 years, you can get a forgiveness loan.
Yeah, that one I have not heard, Yvonne, but I can definitely check and get back to Shalice and Gabby to give you an answer. And I don't know, financial aid, are you guys aware of anything on Title I? Brandy or Elizabeth?
I'm here.
Yeah.
Let me adjust my camera. Not for Title I, only Title IV schools. Yeah, as far as if you've worked for I was just now, as you were mentioning it, looking for the link for teachers
Mhm,
loan forgiveness. So
mhm.
if you give me just a minute, I will put that link out there for you, and you're welcome to click on it and do some research. But I'm only familiar for loan forgiveness for teachers for Title IV funding, not Title I.
Thank you.
But I'll do some research, Yvonne, and see if I can come up with something and send it over to Shalice if I'm successful.
Thank you, Sergio. Appreciate it.
Yeah, absolutely, Yvonne. Anytime. Let's get into delinquency and default, which none of you are going to do. There's really no reason for a student to go into default. When are you considered to be in a default status? You're considered to be in a default status when you are 270 days past due. So that is 9 months of you not working with your lender or servicer, and now very, very bad things are happening to you, right? So if you default on this federal student loan program, the federal government can sue you. They can garnish your wages. We have some teachers on the line and we have some nurses. You guys need a license to practice your profession. If you default on your loans, your license will not get renewed, right? Tax season is upon us. Actually, today is tax day. And maybe you're waiting for a refund check. Well, that refund check is not going to go to you. It's going to come to the federal government to pay down on the loan that you defaulted on as well, right? So there is really no way for this to go away. I always get the question, well, what if I file for bankruptcy? Do these loans go away? They do not, right? So these loans will be with you until the very end. You know what? And I should probably back up because there's really two ways that this loan goes away. They're not the best ways, but there are two ways, right? One is that you die, and the other one is that you become totally and permanently disabled. Not the best options for these loans to go away, but those are really the only way that these loans disappear, right? But listen, if you're having difficulties making payments, or you you find yourself unemployed or having a hard time making payments, simply contact your lender and or servicer. They're there to help you navigate this, because the last thing that they want is for you to go into default. They want to get their money back, and they don't want all these things to happen to you that I just mentioned, right? So if ever you have any issues or any problems, keep in contact with your lender or servicer. They'll either find a different repayment plan, because you can jump around on your payment plans, right? So maybe you decided, I'm going to do the standard term, but then realize, God, this is too expensive. It's too much for me to pay monthly. I'm going to do the extended repayment term, right? That you're able to do that as well, right? So maybe finding a different repayment plan, or looking at doing a deferment or forbearance if you qualify, to be able to postpone payments until you're back on your feet. So that way it doesn't mean that you're going to go into default, because now you're in a forbearance or deferment to help you postpone payments for a period of time. All right. So any changes in your status, make sure that your servicer knows that, right? If you move and change your address, update that with your servicer. Ladies, if you get married and change your last name, let your servicer know that. Your social security number, if that should ever change for whatever reason, let your servicer know that. Your email address, update that as well, right? These are the most common reasons that students default, is because they didn't update their address or their email address, and now you're not getting any communication with the lender servicer, and now you are in a default status, right? So again, just keep in contact with your lender servicer. They'll find some solution for you along the way. So let's talk about saving some money on these loans, right? If you want to be debt-free as soon as possible, right? I'm sure that's the goal for a lot of us, right? So making extra payments along the way can really help you to get there faster, right? You're not required to make extra payments. All you're required is to make the minimum payment that's required of you. But again, if you want to make extra payments, even better, because that'll help you to be debt-free even faster, right? So there are no penalties if you want to pay this off sooner than later. So maybe you want to do the 25-year term, but the goal is to pay it off in 15 years. You can do that, and there's no penalties. It doesn't affect your credit anyway as well, right? Whenever you're making a payment to a loan, this is the way that it goes. The payment first goes to any fees that are assessed to that loan, then interest, and then principal, right? So that's kind of the life cycle of a payment on a loan. But if you want to pay this off sooner than later, they always welcome it. And we encourage you because that way you're debt-free even much quicker instead of having to wait 10 or 25 years to pay this off. And remember, I talked to you about incentives that are available for you. So the federal government and most private lenders as well, private loans, have the same benefit, which is a 0.25% interest rate reduction for signing up for automatic debit. So what does that mean? That means that your payments are automatically taken from your savings or your checking account, whichever you designate. And by you doing that, your payments will be made on time, right? So what is a good thing about this is that number one, it's going to save you some money because you're going to get interest rate reduction of a 0.25%, right? That's always good. It's going to avoid you having any late fees, right? Because it's out of sight, out of mind. Payments are going to automatically be made for you. So you don't have to worry about making any payments or having to remember, oh, I got to go make a payment to my servicer. And it's going to save you time, right? You don't have to stop and log in and make a payment. It's going to automatically be done for you, right? So definitely take advantage of this. Some private lenders have additional benefits that they offer. You want to look at those terms and conditions and what savings they have. Some of them may say, if you make so many on-time payments, we'll give you your credit loan balance, right? There's one lender also that if you had really good grades and submitted your transcript, they'll give you an interest rate reduction as well, right? So look at those benefits, take advantage of them. Those are ways that you can save some money on these loan programs as well. So let me give you some tips about staying organized about your loans. And we talked a little bit about this in the beginning. So again, keep everything together. Anything that you're getting from financial aid, any debt letters, any disclosure statements, promissory notes, exit interview information, because when you graduate, you're going to do what is called an exit interview. And it's usually online, right? It's required, it's mandatory before you graduate to do this exit interview. But basically everything that we're talking about today is going to be in that exit interview. So it'll be another refresher for you that you'll be doing online as well. Make sure that you're opening and reading all of your mail because it could be from your servicer, right? You're probably saying, well, who is Nelnet or who is Ed Servicing or FIA or whatever the case may be? You never heard of them? Well, they're probably a servicer, right? So what is a servicer? It's basically the government contracting to a third party to be the ultimate contact, right? Where they're the ones collecting and helping you go into repayment, right? That is a servicer, right? So if you're getting something in the mail from a Nelnet, then you want to make sure that you open that up because it could be your servicer. If you don't recognize the name, open it up because it could be your servicer. There's about 6 or 7 servicers that the federal government contracts with. So make sure that you know who you are. And then again, you're going to find that at studentaid.gov that I showed you to be able to see who your servicer is. So that way you know exactly to open what mail for who and what. It's probably a good idea to also bookmark your lender servicer's website and create an account if you haven't done so already. Again, any changes in statuses, any email changes, any address changes, update that with your servicer. And then keep important numbers handy, right? So if something happens, you need to contact your servicer, you have it available, readily available for you as well. So what is my advice to you and what should you be doing? So what I would do is go to studentaid.gov, right, and see how much I borrowed, who my servicer is, and look at the loan simulator to be able to estimate what my payments are going to look like so that I can budget myself accordingly, right? That is what I would start doing to get prepared, right? Create an account, download the mobile app if they have one, just to be able to keep track of your loans and whatnot. So that is what I would start, because budgeting, and I'm not going to go into a whole budgeting spiel here, but budgeting is going to be important, right? because your budget as a student is going to be different than a budget after school as well. Why? Because now you're going to have another expense to add on to your budget, which is going to be your student loan payment, right? So you want to make sure that you're budgeting yourself accordingly and that you know exactly what that's going to look like, and to make sure that your budget is balanced and that you're not in the red, right? We have some resources there for you as well. It's a pre-fillable PDF document. I'm sure the Money Management Center also has a budget worksheet for you as well. So take advantage of these resources, because it's really helpful to be able to balance yourself out and be a budget. Remember, budgets are fluid. They're going to change. As your incomes grow, your expenses may change as well. You just want to make sure that your budget is balanced. So remember, if ever you have any difficulties or any problems with your loans or repayments, contact your lender and your servicer. They're there to help you navigate this information. Update your contact information. It should change if you move your email address. Make sure that you're updating that information as well. Read all your statements that are coming in the mail, right? If you haven't heard from your servicer and you're graduating in May, then that may be a problem, because maybe they don't have the right graduation date for you, and you want to make sure that all that is up to date as well. And then any questions that you have, reach out to your servicer. And even if you're graduating, the Money Management Center, Texas Women, the Financial Aid Office, those are still going to be great resources for you that you can contact them, and they can help you navigate this information as well, right? So listen, I covered quite a bit of information tonight, so I want to make sure that I leave enough time for any questions that you all may have for me as well. So let me stop sharing my screen here and come back so I can see you all. There we
Oh,
go.
thank you so much, Sergio. This has been fantastic. And we do now, if you want to unmute and ask Sergio a question, please feel free to do so. Or if you feel more comfortable putting it in the chat, we've got Gabby monitoring the chat. So what questions might y'all have? And if we don't know the answer, we've been researching. We've been finding out the answers. We found out the question about Title I. It's in the chat.
Good.
I have a question regarding Graduate Plus loans. If the school offers them, do you know if those are considered unsubsidized or private? And then I know like they're really not supposed to be taken out unless like really needed because the interest is high. I just wanted to know your experience with those.
Yeah, so a Graduate Plus loan is considered an unsubsidized loan. It's a federal loan, so it's not a private loan. If the school is Title IV eligible, Grad Plus will be available for graduate professional students. That Grad Plus is usually used as a gap financing tool. So when unsubsidized and scholarships and free money isn't enough, then Grad Plus can be a way to help you pay any outstanding balance or for any living expenses that you need, right? You're right. The interest rate on the Grad Plus is 9%, and it has an origination fee of 4%. And what that means is if you need, I don't know, $10,000 in a Grad Plus, it'll be $10,000 minus that fee, right? But that is an option for you as well. And then you also have private loans that work the same way. So if you have good credit, you may want to look at both and shop around to see who's giving you the better rate and features so that you can see what's going to be the better fit for you.
I have a question.
Yes.
How do I know when for example, I have the unsubsidized loan and subsidized loan. How do I know when to consolidate them?
Yeah, that's a good question. So I will tell you that back in my day, when I was going to college, the federal loan programs were completely different, that you were able to borrow through different banks.
Mhm.
So 1 year, a student borrowed through Chase. A second year, they borrowed through Bank of America. A third year, they borrowed through Wells Fargo. And then when they graduated, they had to make 3 different payments to 3 different people. And that was very cumbersome. So that's where consolidation was created, where that it takes all of your loans and makes one new loan with the weighted average of all the interest rates that you had. I will tell you now that with consolidation, it's not as popular because the rates haven't changed too drastically 1 year over the other, but you can take a look at it, right? So you can go and see the consolidation, and what they're going to do is they're going to take all the interest rates on all of your loans you've had while you've been at TWU or any federal loans that you've borrowed, and then find a weighted average and lock you in at that rate. And this is probably a good time to talk about consolidation versus refinance. Consolidation is only done through the federal government, right? Refinance is done through a private financial institution, and those are two separate entities, right? So there are some legitimate refinance companies out there that'll say, we'll take your federal and your private at a low, low price of this, right? But I do not like to combine my federal and privates together. I would keep those separate.
Okay,
If you
thank you.
wanted to refinance your private loans, I would probably do that. My federal loans, I would look at the different repayment options. And if consolidation is something that you're wanting to do, then maybe do that only with your federal loans.
Sergio, are there any benefits that you risk losing if you consolidate and start mixing?
Yeah, if you consolidate your loans, your grace period goes away if you still haven't finished your grace period. And if you refinance, remember that when you refinance, that's through a third-party financial institution. So all you have left is whatever they're offering to you in repayment plans, right? Because when you refinance and you put your federal loans with that, then all the benefits that we talked about in the federal loan programs, like grace period, the different income-driven options, public service loan forgiveness, all that goes away. And all you have left is whatever that refinance company is offering to you. So do your homework, do your due diligence, outweigh what's going to be the best option for you, right? But if public service is important to you, then I would not refinance my loans.
And I would just say we put it in the chat, the link to the Student Money Management Center if you guys want to make an appointment and talk about that. There's kind of a hierarchy, a question of asking what's going to be beneficial to you as far as keeping your loans separate. If you have a really good interest rate on one, do you risk losing that by doing some things? And so we could definitely help you walk through that if that's something that you have questions about. Are there any other inquiries, comments, something that's a burning question?
I had one. I don't know. It's okay. So you mentioned earlier that at some point, if you don't choose the plan, like by a certain time or whatever, they'll end up picking the plan for you, and that's usually the 10-year plan or whatever. Is there usually like a date or like a time where you need to be picking the plan? Like, will your servicer let you know, like, this is by this date you need to choose your plan, or we're going to pick it for you? Or
yeah, the servicer will tell you, hey, listen, Piper, we noticed that you're about to graduate in May, and your payment is going to come due on this date, right? So they're probably giving you the standard term. But if you wanted to change that, then during your grace period, that's 6 months that you have before you go into full principal and interest. That's the time when I would start looking at all the different repayment plans, do this loan simulator to see what fits within your budget and what's going to be the best option for you.
Okay, and then you can, I don't know if you already said this, but you can change the type of plan that you pick whenever, or is there like a...
Yeah, so let's say that you say, you know what, I can do the 10 years, but then you realize, God, this is a big payment for my budget. Then maybe I want to do a income-driven option because maybe my incomes are lower, or maybe you want to do the extended term. So you can switch between options.
Okay, thank you.
Yeah. Any other questions?
Yes, please. Oh. Hello. Please,
Yeah,
ask a question.
Yes, Helen.
Sorry, I came in late. I wanted to find out the grace period, how long it is, and how to make that determination of making the payment.
Yeah.
Would they make that determination for the student borrower, or the student would have to?
Yeah, so the grace period, everyone is entitled to a grace period, right? So once you finish school and you graduate, you have a 6 months grace period before you go into full principal and interest payment on your loans. So, so let's say that undergraduate student, you're thinking about going to grad school, right? So if you, let's say that you graduate and then you're graduating in May and you go to grad school starting in August. So you haven't exhausted that grace period, the full grace period, because you didn't do 6 months, right? So that when you graduate graduate school, you also have 6 months grace period on both your undergraduate and graduate loans. But if it takes you longer than 6 months to go from undergrad to grad school, when you finish your grad school program, your undergraduate loans are going to come due when you graduate. But if you're wanting to align all your loans to come due at the same time, you can do a forbearance of 6 months so that all your loans come due at the same time, if that makes sense. So you only get one grace period, but once you exhaust your grace period, it is gone. So for those of you thinking about going to grad school, if it takes you longer than 6 months to transition from undergrad to grad school, then when you finish graduate school, your payments are going to come due when you graduate, unless you tell them to postpone it for 6 months so that all your loans come due at the same time.
Okay, and when you like I'm graduating from grad school, when you graduate from grad school, you have 6 months grace period.
Yes, ma'am. All your loans for grad school, you have 6 months. Did you have any loans in undergrad, Helen?
No.
Okay, then you should be good. You have 6 months from the day that you graduate grad school before you go into full principal and interest on your loans.
Okay, and if you wanted to have some, I guess, leeway, you want to be able to determine how much you're gonna pay, you call them. And
yeah, so you can go to studentaid.gov and it's in the chat as well. But studentaid.gov is where you're going to find this loan simulator where you can put in the amount that you've borrowed, and it's going to give you the different estimated payments on each of the repayment plan options so that you can kind of figure out what's going to be the better fit for you within your budget to be able to make those payments. But you can also contact your servicer. They can help you navigate that as well to see what's going to be a better fit for you. But that's where I would start, student.gov, look at Loan Simulator, and be able to play around with the different repayment plans to see what's going to be the best fit for you.
Is the repayment tied to job acquisition or not?
So there are some repayment plans that are based on income-driven options, right? So that are based on your adjusted gross income, your household size, and your debt levels. So there are some payment plans based on that, and others that are not, that are just based on a 10-year term or 25-year term.
Okay. Yeah. And you get to choose which one is best for you?
Yes, ma'am.
Okay. And the studentaid.gov would be where to find that, or call your servicer?
That's correct. Studentaid.gov or call your servicer.
Okay. All right.
Yeah.
Thank you very much.
You're welcome. Any other questions? I know we're right at time, so I want to make sure that so I saw there's really good chat going on in the chat, which is great. I put in some resources in there for you as well. Well, thank you so much for the invite. I hope this information was helpful to you all. Congratulations. And Shalise, do you want to close us out?
Absolutely. Thank you so much. What a great session, and the participation from the students. You guys you always amaze me. You are just wonderful people to be doing what you're doing and getting your education. And we know you're going to go on and do great things for those who are graduating. But thank you so much for the participation, because you make us be aware of what's topical. What are the questions that are you're thinking of, and what is affecting you right now? I do want to remind you guys that we do have one more week of Maroon Money Month. That's the Student Money Management Center initiative to promote financial education. And we've got one more week coming up. Well, we're in the final week, I should say. We've got one more event tomorrow, and it's called Quick Coaching. So if you're on the Denton campus between 11 and 2 tomorrow, in library, room 101, we've got Maroon Money mentors that will be there to do quick coaching sessions. If you want to talk about budgeting or how to set up your budget so that you can start planning for that loan payment to be in your budget, stop by tomorrow. If you've been participating in Maroon Money Month and you've got a punch card to get your card punched, tomorrow's the last event to get that card punched. And if you get your card off filled out with 6 punches, you get that really cool maroon Money Month tote bag that we've been giving away. I did put the financial coaching link in the chat if you want to set up an appointment before May 2nd. Don't forget, when you exit this Zoom, you're going to get this really quick survey to take, and we appreciate you for filling that out. And once again, thank you to Sergio. Thank you to our experts in financial aid. Thank you to Stephanie for supporting us with Spend Well. Congratulations, everybody graduating. Go Pioneers, go out and do great things. And thank you so much. Have a great evening, y'all. Bye.